All right, hello guys, it's Robbie here, and here I am with a breakdown about the trade that I took today, which was actually a risk-free entry, and I will explain in this recap what was my thought process during the session and why did I choose those entry opportunities, those entry zones as my for my risk-free entries. So yeah, here we are on the 15-minute time frame. What happened on the 15-minute time frame? Actually, let's start with the 4-hour time frame. And on the 4-hour time frame, nothing really has changed since last week's Thursday. So as you can see, this is the 4-hour time frame that has happened since last week Thursday. This is the last candle of the last week Thursday, and everything that happened since then, it's technically just a piece of shit. But yeah, nothing really has happened on the 4-hour time frame. We had the last recent 4-hour demand area right here, but that demand has breakable supply area. But at this movement right here, we were able to found valuable 15-minute demand areas. So let's take a look on the 15-minute time frame. On the 15-minute time frame, there wasn't any higher time frame supply zone mitigation. So technically, this is a middle of nowhere reversal. But on the 15-minute time frame, there was a demand mitigation which held the price, and after that, price was ranging right here, as you can see, created liquidity on the upside, liquidity on the downside, and this liquidity has been built up technically for the 15-minute demand below right here, where I was expecting longs before the session, because session started with this candle. This is the first candle of the session, this one right here. And when I was making the markups, price was sweeping this liquidity out. And actually I was waiting for a candle closure on this demand area, because technically this week, this demand right here was a valuable demand area, which was the origin of this whole movement. But this demand was directly part of this liquidity. So if price could have closed inside of that demand area, then I would probably focusing on longs, which means that this liquidity would have been swapped with this movement, and price closed inside of this zone. So technically we could expect long movements. However, as you can see, this demand has broken. There was a clear body break on this demand area, and price couldn't really manage to mitigate the lower demand. So technically this low point is a middle of nowhere reversal, which means it will be liquidity for future price actions. And after this body break on this weak demand, and no mitigation on this lower demand, and as you can see, this is just pure inefficiency right here. So this is a clear middle of nowhere reversal. Price also made a break of structure with this movement right here. This break of structure came into the market from this 15-minute supply, but beforehand, before the break of structure right here, price has managed to mitigate a small percent of this 15-minute supply. This 15-minute supply was the extreme of the flip of this demand area, where you were waiting for a long opportunity yesterday in New York session. There was a long opportunity right here, if I remember it well. And this weak demand right here has been flipped by this supply area. This was the extreme of this whole flipping movement, as you can see, but directly the flip happened here. So after a reversal from this point, price has built up liquidity right here for this supply area, and after the sweep of this liquidity with a small percent mitigation, price reversed back to the downside, made a breakout structure, and technically a 15-minute change of character after. But why was it a change of character here? Because technically price has made a change of character here to the upside. So at this point, price made the change of character back to the downside, and also made the breakout structure and left behind the newly formed supply area. When session started, I sent 2 possible sell opportunities, which was the first confirmation entry on this supply. But we had a chance to see a deeper mitigation on this supply area, and after this deeper mitigation right here, we could see the movement to the downside, and then we could expect the break of this low point, because this is a middle of nowhere reversal, which means liquidity, and we could expect the mitigation of this demand, which would be my final TP point. So for the shorts, I was targeting this 15-minute demand. All right, let's take a look on the 15-minute time frame just a bit more. As you can see, here was a clear wick above. So this supply hold the price, and this wick above is an important because I did count the 50% mitigation in this case because of this weak above. Price closed inside of this zone, which was the last recent valuable supply area. Even though it still didn't mitigate the 50% of this higher supply area, but yeah. So technically that's all based on the 15-minute time frame, and the 5-minute and 15-minute was exactly the same. So there wasn't any difference between the 5-minute and 15-minute. So we can take a look on the 1-minute time frame. And what happened? Technically, the session started with this candle right here. This is the first candle of the session. After the session start, price has levitated back to this supply area, made a small percent mitigation, created a change of character, and technically this change of character was a sell trap. Probably there were sellers, there were beginners who were trying to enter here. They have been swept out. Price even built up more liquidity at the top of this supply area. And after the liquidity creation right here, as you can see, after the almost full zone mitigation here, price has wicked above the 15-minute supply area, even on the 1-minute time frame. So even on the 1-minute time frame, it was a wick above. Price swept all of these liquidity from this point, reversed back to the downside, and the reversal was right here. And this was my position. This was my position where I get a tag in. And let me count the criteria first. What happened after the sweep of this liquidity? We had higher time frame zone mitigation. Price has managed to mitigate the last recent demand supply area. Perfect. There was liquidity take. There was liquidity which has been swept out. Also, there was liquidity which has been swept out, which has been swept into this 15-minute supply area. So price has swept really nice amount of liquidity. Also, there was some liquidity which has been swept into the 15-minute supply area. So we had really nice amount of liquidity take for the higher time frame zone. There was inefficiency for both areas, as you can see. In this case, I choose the wick because it was the inefficiency starter. The wick is greater than the previous candle. So technically the wick was the real inefficient area. Here is the inefficiency right here, as you can see. So both of these zones had inefficiency. And technically we are in a pro order flow based on the 15-minute time frame. So price had just broken below the last recent low point. On the 15-minute time frame, return back to the last recent supply area, and we can safely wait for simple 1-minute change of characters because the order flow is bearish. We are trading based on the 15-minute order flow, even though the higher time frame, the 4-hour time frame, was still bullish. We could look for sells based on these supply zone mitigations, and we could target valuable demand areas. And that was the reason why I was targeting this 15-minute demand here, because on this 15-minute demand, I was expecting the continuation to the upside, but also a flip to the downside. If the flip happened, then I would target this 4-hour demand area with shorts. But yeah, that's the reason I was targeting this 15-minute demand, because we have less room to trade in this case. So yeah, we have all the 4 base criteria that we need. So we could count, and I could count the variable ones. The first variable one was the flip in this case. The flip has happened right here, but we know that every flip is a change of character. So the flip of this demand happened. This was the last recent variable 1-minute area that has caused the breakout structure here. And there was the volume that this demand has printed. The breakout structure happened here to the upside, and price has reacted on this supply at this demand area first, but after the reaction, it couldn't manage to fill up the inefficiency for the extreme. So there was still unfilled inefficiency for the extreme area, as you can see. Here is the unfilled inefficiency. And after the reaction, the small reaction, price with volume candles broke below this demand area, flipped this demand, and created another possible entry opportunity, which was the decisional. So this was my flip zone, this was the decision, and this was my extreme zone. In this case, this wick right here. Perfect. Flip happened, which was our 5th criteria. The 6th criteria was the V-shaped recovery. Technically, price V-shapedly reacted on this 15-minute supply after a mitigation. If you take a look on the 5-minute time frame, it was a really nice V-shaped recovery, but it's a bit clearer on the 3-minute time frame. it was a bit debatable, there is no doubt about it, but we could count this one as a V-shaped recovery, even though price couldn't manage to break below the last recent low point, last recent demand. With the first movement, this was a really nice V-shaped recovery, and price printed volume, which was the most important thing for me. All right, so this was the sixth criteria, V-shape. The seventh criteria was the liquidity target. There was liquidity on the downside. This one, this low point, was liquidity in itself for the future shorts. Middle of nowhere reversal, this is liquidity for the future shorts. So this is the seventh criteria. The eighth criteria would be the 50% mitigation. As I said, 15-minute and 5-minute and 1-minute candles closed inside of this 50-minute supply, which means it mitigated more than 50% of this zone, even though there wasn't still 50% mitigation. And we had a chance to see a sweep of these zones into a deeper region of this zone, see a 50% mitigation and the real movement to happen. I was perfectly fine if I get stop losses on these zones. These was really high probability opportunities because this zone, the last recent supply area, hold the price in, and it wasn't 100% necessary for the price to mitigate deeper region of the higher supply area. So yeah, 50% was there. So this is the 8th criteria. The 9th criteria would be the not coming from an opposite sided zone. There wasn't any valuable higher time frame demand mitigation at all. And we do not care with 1-minute demand mitigations, even though there was a 1-minute demand. We do not consider 1-minute demand areas, 1-minute opposite sided zone mitigations in order to not count the not coming from opposite sided zone criteria. So this was the 9th criteria, and we could count the corrective pullback strong pro movements technically. So if you take a look on this 15-minute time frame, since that point right here, when price reversed to the downside, technically the bearish movements were stronger than the bullish ones. So the bullish movements has exhausted, and you can see that the last recent movement with downside was extremely bearish, extremely volumey, and yeah, technically we could count this criteria, but it wasn't that clear, to be honest, but we could count it. And yeah, the bullish movements were exhausted, and that's why we could count the corrective pullback strong pro movements criteria, which means I had 10 criteria for the decisional zone, and I had 11 criteria for the extreme zone, because technically the decisional was the liquidity for the extreme zone in this case. But yeah, so I had 10 criteria for the decisional. I had 11 criteria for the extreme zone, and I used a risk split entry right here because nowadays price tends to reverse after a decisional zone mitigation without liquidity creation. And actually the decisional zone has a chance to hold the price without liquidity below it. So that was the reason I was using a risk split entry here. So there was 0.25% risk on both areas. So yeah, and after the tag in, price reacted really nicely, managed to reach my break-even point. This was the low point, what I wanted to see the fail. It has happened, so I put my stop loss into break-even at this point, but unfortunately price couldn't really manage to reach my partial point at 5 risk-reward ratio, which also lined up with the 5-minute demand area, which has caused the flip of a 5-minute supply. 5 risk-reward ratio would be my partial point. I would close 50% of my whole position right here, but yeah, unfortunately price couldn't reach it, reversed back to my entry level, swept me out in break-even. And after that, price created liquidity for the extreme. In this case, technically, this setup right here was extreme versus decisional type 2 entry opportunity when price makes a flip of the last recent demand area. So technically, the significant movement happened from the flip zone. And in this case, technically, the extreme didn't do anything. So the best solution in this case to monitor the price action, how price approaches the extreme zone. And if price slowly approaches the extreme zone, you can still enter on this zone with a risk split, with the other half of your risk split. But if price approaches this zone with volume candles, with strong movements, then it's better to wait for confirmation entry on it on the 1 minute time frame. So wait for reconfirmations on the 1 minute time frame, or you can wait for liquidity. However, even though there was liquidity, I was more concerned with these volume candles. Price wasn't really reaching this zone with slow movements. It reached with volume candles, and because of these volume candles, I decided to delete my order on the extreme, and I was waiting for a reconfirmation or a deeper mitigation, or after a deeper mitigation on this higher supply area, which still had a chance to hold the price. And as you can see, it held the price. So after a deeper mitigation, price couldn't really manage to do anything at all. There was the last recent demand area where I was waiting for a flip opportunity, but even though flip happened 15 minutes before session close, price couldn't really manage to print any possible entry opportunities. So technically, that's all. I had 10 criteria for the decisional, 11 for the extreme, but after price swept me out in break even on the decisional, which was the more significant zone in this case, and price strongly approached the extreme zone, I decided to delete my other half of the risk split on this extreme. And actually it turned out as a good idea, good thought, because I managed to not have a stop loss hit right here on the extreme. So yeah, and technically that's all, guys. I really hope you can grab some value from this recap, but if you have any question, if you have any question, feel free to ask me in DM or in the training questions channel. I will answer it when I can. So yeah, that's all, guys. Take care, and I wish you all of you a really nice rest of the weekend, rest of the day, and take care, guys. Bye.